Good morning and welcome back to Almus Market Mornings. Markets opened on edge as trade tensions escalated. A headline 104% tariff on select Chinese goods has spooked investors, triggering fresh recession fears and renewed talks of a Fed rate cut. The offshore yuan slipped to 7.42. Since then, it has recovered a bit, but there is a broad pressure on Asian currencies. The Indonesian rupiah, Korean won, and the Indian rupee all are trading slightly weaker. In contrast, the euro, yen, pound are holding firm against the dollar. JK, this 104% tariff has stirred up a lot of concern. Do we know if it is broad-based or if it is specific? And how would you interpret the sharp regional currency divergence?
Hi, good morning. I think this is the details are not clear, at least to me right now, about the 104%. But definitely, I'm getting a sense that we are somewhere near the peak of this trade war. If you look at how it all happened in 2018, also during Trump 1.0, uh, similar situation had arisen, and there was a both countries had reached a point of no return, almost point of no return. But since then there was a give and take, and it calmed down. And I think current situation is almost similar to that. China saying that they will go to any extent to fight this, and US imposing a record 104% tariff on their goods. So but that's just an optimistic view, and we still have no clue that anything is returning or reversing. Yes, Asians have taken a hit because China is an important factor for all the currencies and the local markets. And until there is some sort of a resolution, I think there will be concerns in the region, particularly in Chinese yuan. Of course, we did see a new high at 7.42. That is the offshore yuan, but it has since retraced a bit. Um, Maybe that's also because of Chinese fixing being just above 7.20, and nothing, no indication that they are trying to weaken the yuan a lot more. Although that is suggested as one of the policy options, weaken the yuan by 15 to 20%, and you make up for the tariff loss. But I think that is not something that China would be seriously considering right now, because that affects the foreign investors sentiment for China's investments. So I think they will be going in a guarded way, but they will be standing firm. I think this has to resolve itself by both the countries coming to the table, and this is what happened in 2018. Also, eventually they came to the table and agreed on something. So that I'm on the slightly on the optimistic side. Yes, despite the dollar index moving lower, and that had two major currencies leading it. One is the euro, where the political development of the coalition government being formed in Germany was a positive news. So the euro marginally broke below 1.09, but since then it has rallied to above 1.10. The other currency to lead the dollar index down is the dollar yen. The two factors behind it. One is after the stock market falling yesterday, yields in the US have fallen, and when the yen, of course, moves directly with the yields, and whenever the yield goes up, yen weakens, and whenever the yield comes down, yen strengthens. That's one factor. The other factor is that US officials have said that there are talks proposed with the Japanese government on the trade issues, and this can actually include non trade barrier like yen. So that's one of the reasons. So if there is an agreement that Japan would stop the yen weakening further, that could be one more reason. So because the world has shorted the yen massively in carry trade. Of course, these carry trades have already been probably partially unwound with the recent market turmoil. But if there is an agreement to strengthen the yen, uh, I think that can lead to much more. Although I would think that the authorities would do any of such things in a non-disruptive way, but at least the direction would be clear. In that case, yen would be not weaker from here, but it would be stronger from here. So that's the reason why dollar index has weakened, and that has not had an impact on the rupee, because rupee has followed the Asian currency, particularly the yuan. In fact, rupee has turned on its head from 84.95 to as high as 86.30 in yesterday's trade, the yuan weakness renewed importer demand, and even FI flows that have turned consistently negative for this month after showing some reversal in March. So we did anticipate this move of recovery in USD INR, but it has come much faster than we thought. Okay, the current yuan weakness you may stay for some more time, but I think considering that the domestic factors for rupee are macro-wise quite stable, I do not see the rupee following the yuan to same extent unless there is some massive devaluation type of move like a 10-20%. So that is something that I'm not foreseeing right now. Now, importantly for rupee, there is also the RBI policy decision today. Consensus expectation is for a cut of 0.25% in repo rate. However, personally will not be surprised to see a hold in view of the global uncertainties, but at the same time, policy shift or the stance shift to accommodative is very likely. Interest will also surround the growth and inflation projections by the RBI in view of the shifting global scenario. Though going by domestic factors, I think that 4%, 4.2% inflation and GDP at 6.7% projected last meeting may continue, or there may be slight downward revision in the growth and because of the tariff issue. There may be some more liquidity easing measures as banking system liquidity remains tight despite the measures taken so far by the governor. And of course, this is also this meeting will also see first time for another official from RBI, Governor, Deputy Governor Poonam Gupta. Last meeting was the first meeting for Governor Malhotra. In global markets, S&P 500, almost touched the 5,000 and also touched almost the bear territory, falling 20% from the peak. It was all a big reversal from the earlier massive rise which was seen on optimism over the trade talks in the futures market before actual official market opened. But then there was a steady decline. All the indices ended lower. They also brought down the yields, as people turn to safe havens like yen treasuries and of course the Swiss franc also. But surprisingly, again, the gold gave up its gains of Asian morning and came to 2980, where it seems to be making some sort of a base. But even technically, it doesn't look like it has turned up in a decisive way. So gold is something which might be in for some more technical correction, although fundamentally very well supported. Overall, we have the D-Day of 9th April today, American time. The new tariffs come into, play or rather come into effect. But before that, will there be some relief, some sort of postponement or, some indications that, some reduction, give and take? These are something that market will be looking forward to. Although the press secretary of White House has already said that the Trump tariffs will go into effect from tonight. So market will be sitting on its edge, and we will see. First up, of course, we will see the RBI meeting and what the governor says as far as the Indian markets are concerned. And rupee, I think on a broad basis, I would say at 86.50, I would be inclined to hedge more exports, and because eventually I think world cannot live with this type of disruption, and there will be some sort of a relief sooner or later. Thank you.
Thank you, JK. And a lot of moving parts. On one hand, we have got the weakness in the Asian currencies, which is led by the weakness in Chinese yuan because there is an escalating trade war. As of now, there is no indication that the Chinese are looking to weaken the currency substantially. So I think all of that, any sort of devaluation would be speculative to think of as of now, but because there is no official indication. Uh, and despite the dollar index moving lower, which was led by euro strength, yen has also strengthened because there is a reported agreement being formed between US and Japan. Now, this is a very important development because this US and Japan agreement may include the Japanese yen, which is also one of the reasons why it is strengthening. Importantly, there is the RBI policy decision today. Consensus is of a 25 basis point cut on repo. And as JK mentioned, it is possible that they may just hold on and not cut as well. Growth and inflation projections would be closely looked at. I think 4.2% was the figure for inflation and 6.2% for the growth. That was mentioned in the last RBI decision, and that may continue. And that's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.